So out of the three topics, let's go back. So let's discuss what dealing mode is and what STP mode is. So dealing mode in MT4 means there's a dealer who's making up the market by quoting a price, and then you can choose to trade against that price anytime you want. Whenever that happens, it's a bet, as we'll see in a second, and that's how MT4 is designed to work out of the box. So we'll cover this bit, the one with I refer to it as a fishbowl because really it's a you can think of it as a poker table where there's you and there's all the other customers of that dealer, and then there's the dealer himself, and everybody's betting against each other. But it's a subsection of the market that really never reaches the bigger market. That's the dealing mode. And then the other way that MT4 can work is to connect MT4 via a bridge to the broader market. And in that situation, you're trading with a broker who's sending you orders to, say, Goldman Sachs or UBS or what have you, and he's just acting as an intermediary so that you can trade against Goldman Sachs. But crucially, you're not trading against your broker because the broker is trading with you. And that has implications because MT4 works in different ways in both cases. Okay, so to stay with the dealing model, what's going on there is there's a market price at which, say, UBS and Goldman Sachs and a whole bunch of others are exchanging orders, and as a result of that, there's a price that comes out of it. The dealer who's managing the MT4 server quotes a price, a dealing desk price feed, and you're sitting with your MT4 terminal at home, and you can choose to send orders via the internet to take the dealer's price or not. Okay, so crucially, what's going on is whenever you go along the euro dollar, you take the bid price listed by your dealer, and the dealing desk will short the euro dollar. And if the euro dollar goes your way, you'll make money, and the dealer will lose money, and vice versa. But crucially, the trade never reaches the market. It stays an over-the-counter agreement between you and the dealing desk. It's really those are the only parties that are involved. Now, at that situation, the only thing that matters is the price. So either you get filled or you don't. So if you get filled, it's fine. If you don't get filled, then you have a so-called requote. The trade doesn't clear, and you have the option of placing the same trade, but not at the price you originally wanted, but at the price that the dealer now allows you after requoting you. Okay, now this is really, strictly speaking, not the topic of today's webinar, because today is about how MT4 links to the real market, and this is not the real market. This is just a dealing desk. And as many of you know, there are... Right, I can tell that Pan on Fire is following all the topic fantastically. So there's a question on when you place a stop order, what price do you get filled regarding spread? That's a fantastic question. And so basically, if you're dealing with a dealing desk and you place a stop order, then they can, you get filled at the price that you had said. But the problem is, because the price is decided by the dealer, he could essentially quote you a price designed to hunt your stop, lock your loss in, and then the price could go right back somewhere else where your stop wouldn't have been touched. And that's one of the issues when you're trading with a dealer. The issue with the dealer is that the dealer is both part of a bet, the bet you said here, like, the bet about the euro dollar, and he also gets to list what the euro dollar price is, which is a huge conflict of interest in my book, because then you're playing a football match against the other team, which would be in this case the euro dollar or the market, and also the referee. So if you're trading with a dealer on MT4 and you place a stop, then you get the dealer could get you filled at the price of your stop by just listing the market feed at that price. That's what happens in dealing mode in MT4. Did that answer the question? So you don't have slippage, but it could be that your stop has been hunted, and you wouldn't really have a way to know what was going on because it's your word against the dealer. And that's actually the bad thing with MT4. So if you ask me, so the price has been decided by the dealer, who's a party to the bet, as I was describing. Then crucially, he can also see where your stop loss is. So he knows, because you've placed it on his, in front of him, what your limit order is. So it's out for him to go and get it, which is a problem. And then, of course, the requotes. So if you think you're going to get a price and you send your order and then you don't get filled because that that was kind of already off limit. So the price you saw wasn't what you get, is what you see. So that's so much for the dealing mode on MT4. Now we talk about the other extreme. So we've been talking about a situation where the dealer trades against customers and makes a market. Now we're talking about the opposite position, which is DMA or direct market access, whereby a piece of software called a bridge connects MT4 server with the broader interbank FX market. And that's what this is the direct market access, whereby your trades are processed straight through to the market, which is, as we'll see later, is done by orders. So matching takes place through orders, not by price. So up to now, the volume of the size of a trade wasn't even a question. The only thing that got listed and the only thing you see on MT4 really is a single price. And as we'll see in a second, that's kind of just part of the whole truth. So just for clarification, how does MT4 work in bridge mode? Well, whenever you go long the euro dollar, the DMA broker takes two contracts at the same time. On the one hand, he's going to be your counterparty, the way a dealer would be, and he would be short the euro dollar. But unlike a dealer, at the very same time, he would go long the euro dollar to trade with you against the market. So you can think of as a broker as someone who is between you and the market, who's kind of covering your identity so that the market doesn't really know who he is trading against, which is kind of useful because if you're a systematic winner, that can be to your advantage. Otherwise, people don't want to trade with you. That's why I say dealers kick out systematic winners or scalpers, because they, if they always lose against you, they don't want you anymore on the poker table. So far, so good. Right? Okay, I'll assume yes. So now there's the question of the market price. Everybody's talking about the price reaching one level, reaching the other level, and what have you. But I get, remember, I work for a broker, and we have like a help desk supporting customers. And you would not believe how many people actually spend years trading without really knowing how the market price comes together. So at the risk of boring you, I'm just going to do a little bit of a primer, and I promise you it's going to get more interesting in a second, because if you dig down, you really get down to interesting stuff. So the first thing is, of course, the price is the output of bid and ask matching. But hey, I'm showing you now, and what you can see here is not one bid ask at the top, but 20. Now, why is that? Well, really, because you have the order book, and people are feeding limit orders into the order book at different price levels and different volumes. Yeah, so I've got a question that says that the daily high and low price of an FX pair varies between dealers. Yeah, so let's go back to one step. So if we go back to the bowl, really. If you think of this fishbowl, really what this is one dealer that is quoting whatever prices he really wants. He could, for all it takes, he could be making up the price and saying that the euro dollar is now at 115. And unless you had access to several price feeds, which is highly advisable, you wouldn't really know what the market price was, because the market price really it's a bet. And if you take that price, then you've accepted that was the market price, because you've made it the market price by virtue of accepting it. So dealers, and that's the big trouble with MT4 and the FX market, is that essentially any broker can make up a price and they can list it to customers. And if customers don't really know and can't tell, then they could be, for all the dealer cares, they could be off the market all the time and no one would really notice. Of course, that's when scalpers help you. And there are people who realize that if one guy is making one price, another guy is making a different price, you have the opportunity of arbitraging across different dealers. So yeah, your point is you've noticed that the daily high and low price varies across dealers, and that is correct. And that is your opportunity to arbitrage whenever the bid of one guy and the ask of another guy cross, because you can make a free profit through that. That's what holds all this in balance.